Hey everyone, welcome back to another video. This is My Financial Focus, and in this video I'm going to cover a few different stocks that have fallen quite a bit from their all-time highs just a few months or a year ago. And this has happened as a result of the recent economic news that's come out about the global economy, everything from the 7.5% inflation rate in the US to Russia invading Ukraine to the regulation of big Chinese tech firms by the CCP to global supply chain disruptions. A lot of stuff has been happening in the economy recently, and as a result, it's negatively impacted the stock market. And so each business that I cover in this video, or each stock, the business has very strong underlying fundamentals in their financial statements. And each business that I cover in this video, they had increased revenues and net income from 2021 to 2022, with the exception of one, which I'll get into. And that's basically it. I'm just going to be looking at a few different stocks that have tumbled from their all-time highs, and then I'm also going to be doing a quick little discounted cash flow analysis for each individual stock. And these values, basically how I calculated them for each stock that I'll be covering of the 8 stocks in this video. I got these values from Yahoo Finance for the growth rate for years 1 through 5, and then for 6 through 10, I basically just took 50% of whatever the growth rate was for 1 through 5 that Yahoo Finance calculated. And so we can see the first stock that I'll be talking about is Meta Platforms. Meta Platforms was trading at an all-time high of about $378 per share, and it's since tumbled to $199 per share, which is about a 48% decrease from all-time highs. Their current price to earnings ratio is 14.53, so they're trading at about 14.53 times their current net income. And basically, Meta Platforms, their main revenue source comes from Facebook, which is a social media platform for advertisers to run paid marketing campaigns on. And we can see from this intrinsic value calculated here, this discounted cash flow model, that based on these metrics, the intrinsic value per share comes out to be about $450 per share, with a 50% margin of safety of about $230 per share. And compared to the current share price, that means that Meta Platforms is currently trading based on these values, these estimated values from Yahoo Finance. It's currently trading at less than 50% margin of safety compared to the intrinsic value. So that's very interesting to see. And so the next stock that I'm going to be looking at is Alibaba. And we can see Alibaba has tumbled quite a bit as well over the last few years and months. We can see that their all-time high was around October of 2020 when they were trading at $309 per share, and they're now trading at $100 per share, which is about a 68% decrease from their all-time highs. Their current price to earnings ratio is 26.79, and basically how Alibaba makes money is they're a Chinese multinational company, and they primarily specialize in selling products through e-commerce and retail. And if I go into my discounted cash flow model here, we can see that based on the estimates provided by Yahoo Finance, that the intrinsic value per share comes out to be about $227 per share, with a 50% margin of safety of about $113 per share, which compared to the current share price, just like Meta Platforms, would put Alibaba at about a pretty strong buying opportunity, calculated to be about less than 50% margin of safety compared to the intrinsic value. And so the next stock that I'm going to be looking at that's fallen quite a bit from their all-time highs is PayPal. And we can see that PayPal has fallen quite a bit all the way in 2020 when the initial lockdown measures went into place. It was trading about $86 per share then, and all of the growth that they've experienced since then, all the way to their all-time highs of $308, they've pretty much lost all of that stock market growth, and their share price is now trading all the way back down to $99 per share. And it's fallen from $308 per share, which means it fell about 68%, almost 70% from their all-time highs. And the current price to earnings ratio is 26.79, or not 26.79, it's currently 28.42. And this is the one company on this list that hasn't actually experienced an increase in their net income. Their net income for 2021 was about $50 million less than their net income for 2020. In 2020, it was about $4.2 billion, and then in 2021, it was about $4.16 billion. So it was a small decrease. And the way PayPal primarily generates most of their revenues is through transaction fees for their online payment system, as well as like premium business features and things like that. And we can see from my discounted cash flow model that according to these values, PayPal's intrinsic value per share is about $106 per share with a 50% margin of safety of about $53 per share. And so based on that, we can see they're currently trading at slightly below their estimated intrinsic value per share. The next stock that I'm going to look at is Shopify. And we can see that from their 5-year chart, Shopify has also tumbled quite a bit from their all-time highs. Their all-time high was about $1,690 per share, and they've tumbled to now $601 per share, which is about a 64% decline from all-time highs. They're currently trading at about a 25.70 price to earnings ratio. And basically, to sum up, Shopify is a Canadian e-commerce company, and they provide an e-commerce platform for online stores, and they make money primarily from subscriptions to their platform, transaction payment and referral fees, and also commissions from selling website themes on their platform. And we can see from my discounted cash flow model that based on the estimates from Yahoo Finance, their intrinsic value per share is estimated to be about $277 per share. And so that would mean that although Shopify has tumbled quite a bit from their all-time highs, almost 70% from their all-time highs, they are still potentially overvalued based on the estimates from Yahoo Finance. And the next stock I'm going to look at is Zoom Communications. And we can see that Zoom has also tumbled quite a bit from all-time highs. In about October of 2020, they were trading at about $559 per share, and they're now trading at about $109 per share, which is a decline, probably the largest on our list, of about 81% from their all-time highs. Their current price to earnings ratio is 24, and basically how Zoom brings in revenues is they provide a free platform for video conferencing, which has limited services for their customers. And then for the customers that want upgraded services, they can subscribe to new upgraded premium models for their Zoom communications platform. And that's primarily how Zoom brings in revenue. And if we look at the discounted cash flow model, we can see that Zoom's intrinsic value per share is estimated to be about $130 per share. And so that means that Zoom is currently trading at about their intrinsic value per share based on the estimates from Yahoo Finance. And the next business I'm going to look at is Etsy. And Etsy is also trading pretty low. Their all-time high was about $294 per share, and they're now trading at about $152 per share, which is a decline of about 49% from all-time highs. Their price to earnings ratio is 44.61, and Etsy is basically an e-commerce platform for people who want to sell handmade items like bags, clothing, and furniture. And they make money by charging their users a fee for listing products on their platform, and then also taking a small commission for each individual sale on their platform. And then lastly, they also make money by charging fees for product advertising, payment processing, and also website building tools. And we can see from my discounted cash flow model here that according to the Yahoo Finance estimates, their intrinsic value per share is about $270 per share, which would put Etsy at a undervaluation based on the current share price. And also we would see that they're currently trading near their 50% margin of safety of about $135 per share based on the Yahoo Finance estimates. The second to last company or stock that I'm going to be looking at is Epam Systems. Epam Systems has fallen from an all-time high of about $705 per share to what is now $198 per share. That's about a 72% decline from all-time highs. Their current price to earnings ratio is 24.34. And basically, Epam Systems, they specialize in selling their services for product development, digital product design, and digital platform engineering. And if I look at the discounted cash flow model here, we can see that the intrinsic value per share is estimated to be about $302 per share, with a 50% margin of safety of about $151 per share, which means they're currently trading below their intrinsic value per share and almost trading near their 50% margin of safety based on the Yahoo Finance estimates. And the last stock that I'm going to be looking at is Netflix. Netflix has fallen about 48% from their all-time highs of about $660 per share to what is now $360 per share. And for Netflix, with the discounted cash flow model, I had to change up my calculations a little bit here, mainly because of their business model. Netflix, they primarily make money through subscriptions to their streaming service from their customers, but the way they bring streaming content onto their platform is by paying cash up front for things like Netflix originals, as well as acquiring different shows, and then they usually amortize those costs over time on their income statement. And that basically means that in the same year that their revenues and their net income are increasing, their free cash flow might be negative because there was a larger cash outflow in that year than there was a cash inflow. And so because of that, their 2021 free cash flow was actually negative. And so for this particular calculation, I ended up utilizing their 2020 free cash flow for this, which is obviously going to skew the numbers a little bit, but not by that much because the growth rates are also pretty much the same, and the net cash minus the net debt on their balance sheet is also the same. And so based on these calculations, we can see that the intrinsic value per share is estimated to be about $64 per share with a $32 per share margin of safety, which would put Netflix at an overvaluation still, despite the fact that they've fallen by about 48% from their all-time highs. But I would definitely love to know what everyone who's watching this video thinks about the 8 stocks that I covered in this video. Is anyone holding shares in any of these stocks, or is anyone thinking about buying into any of these stocks? Definitely let me know in the comment section down below. Leave a like on the video if this video provided any value. Subscribe to the channel, and I'll see everyone in the next one.